Make waves, my friends. Welcome to Unusual Due Diligence. I am your host, Poseidon. Today's fresh episode is Toying Around with Anchor for Fun and Profit. Did you know that an estimated 16% of people have misplaced or outright lost the keys to their car, and that's per year? That's a stunning number. It makes you wonder if someone is collecting cars. Like you, I'm a big fan of all sorts of automobiles, including the Lambos. 6 billion pieces of paper. Did you also know that people lose money? It happens, I hear. But specifically, I'm talking about the paper money. That's fiat money. And I don't mean to short sellers or risky gambles on random penny stocks. And I don't mean that $6 billion are lost each year. It's likely far more than that. I mean, likely 6 billion pieces of paper are lost each year. And that doesn't include the intentionally destroyed notes either. That's a subtle reason why the United States printing press has to print the actual money. It's not just for stabilizing an economy. Sometimes people lose car keys, and apparently there's 6 billion plus pieces of paper just missing out in the world somewhere. Here's a live example posted on Reddit recently. A note with actual gold thread through it. Amazing, right? Makes you wonder what crypto and currency will thread together. Let's be clear, this just isn't 6 billion of $1 bills. This is 6 billion of, say, ones, twos, fives, fifties, and hundreds. Could you imagine the payday of one day just running across a large stack of missing $100 bills? If you're holding Anchor, you might have one better. And you know, the digital economy has helped people not lose those pesky paper notes as much. However, it does still happen. And a remarkable thing is that it seems to happen across multiple types of digital assets. Even Bitcoin, the cryptocurrency baseline, has an estimated rate of loss as high as 4% per year of the current supply. I make the argument here that if people lose car keys, actual paper money, their Bitcoin, then there is without a shadow of a doubt that there are people in the world who are losing their Anchor. The critical question then isn't whether or not people are losing Anchor, but how often they are losing Anchor, and what that means for a fixed supply. Unlike the United States Treasury, no one is in the position of printing more Anchor. Hold on a moment, because I'm losing my mind at this thought. Fixed supply, entropicate forces working to reduce that supply. What does that mean? It means, my friend, that the price of Anchor has a little invisible hand, slowly lifting the price of Anchor to the moon, or maybe Alpha Centauri, as I'll show shortly. The question we have to ask now is, how much? That is, what sort of impact is there to the price if we were to lose a certain amount of Anchor per year? Let's do some calculations based on the loss rate of other things. Cryptocurrency is highly speculative, and there's no one way to know what the actual loss rate of Anchor is going to be until it happens, or some statisticians gather to do the math. Until then, let's pull off some unusual due diligence together and make waves. So, let's speculate together. Here's how this will work. Together, we are going to go through the top 10 things that people lose. And then, let's see what a reduction in the available amount of Anchor, what that could do to the Anchor price, as is today with no changes. Let's have some fun. First, a little did you know. Top 10 lost items. 1. Keys. Car keys, house keys, keys. 2. Phone. 3. Pens and other forms of stationery. 4. Glasses. 5. Remote controls. 6. Money. 7. Socks. Seriously, what's up with that? 8. Phone charger. 9. Bitcoin. 10. I'll present this as a question. What if they're Anchor? Okay, before we talk about what losing Anchor can do to the price, let's talk about what the price is made of. It's made of stardust. 10 billion pieces of stardust. 10 billion. That's not notes lost. 10 billion is the supply cap for the Anchor coin. There shall have been and shall only ever be precisely 10 billion. 10 billion is the number. No more, no less. Well, actually, no, there will be less. Remember, people are losing stuff, and that stuff even includes Anchor. If every Anchor coin were in circulation at, say, a price of 10 cents per coin, then the entire market cap would be about 1 billion. You can see that in the data, as shown on the screen, too. Market cap is going to be an important aspect of our formula here. Matter of fact, let's talk toys. Did you know that the market cap for a toy company is 13 billion? That's right. Hasbro, the company behind every toy that you'd find in the store, has a market cap of $13 billion. So let's ask an interesting question here today. What would the price of Anchor be today if Anchor had the market cap of, say, a toy company? The answer is about $1.30. or $1.30 in US dollars. From the current price levels, that is an outstanding gain. That'd be pretty remarkable. But what happens if you were to say, lose the keys? Assuming a 16% attrition rate due to lost keys, the price climbs steadily to $1.55. But let's flex the fingers a little bit more. Let's say we don't want to lose the keys. For whatever reason, let's say the Anchor team decides the best move for them and for the future of the Anchor platform is to do what's called a coin burn. Now, the largest recorded or known coin burn to date is apparently 70 billion coins. Anchor doesn't have 70 billion coins. There's only 10 billion coins total for Anchor. So let's step back and think about this from a fresh perspective. Let's say half of the known coins for Anchor are simply burned up. Hold up, are you wondering what a coin burn is? A coin burn is when a coin is simply removed from circulation. It is no longer possible then for that coin to exist. The equivalent in the paper currency world would be taking a dollar bill and setting it on fire. So let's speculate in an easy to follow interval. Let's ask if half the supply is burned out of existence, what happens? Thanos snapped. Well, without an adjustment to our current market cap, the price still goes up. A reduction of half of the current Anchor total supply, any other condition, moves Anchor up to about 20 cents. This is following a naive formula, but it's informative. 5 billion Anchor coins is still a lot of coins, and if the market cap stays fixed at 1 billion, the math just works out to a 200% gain. How's it look in our toy company example? Meaning, if we took Anchor and burned half the coin, and then made the compelling argument that the market cap of Anchor should be minimally equivalent to a toy company, then what do we get? We get the price of $2.60 per coin. So a $1,000 investment turns into a $26,000 gain. That's pretty remarkable. Let's keep going. Wait, what do I mean 1,000 US dollars turns into 26,000 US dollars? I mean that if you had a 1,000 US dollars and bought, say, 10,000 Anchor coins today at 10 cents each, and then Anchor grew in value to that of a toy company, you'd have a value of about 13,000 US dollars in your account. Now, burn off half of the supply in a coin burn, and now you're looking at 26,000 because 2 times 13 is 26. At $13 billion, Anchor still wouldn't even be close to the market cap of Bitcoin. And what's crazier still is that you're potentially sitting on some pretty impressive gains the higher the market cap goes. Let's look at the possibility of Anchor finding its way to the value of, say, FedEx. So FedEx has a market cap of right around $70 billion. Again, that's a lot. And funny thing is that it's about the same number of the current record for the total crypto coin burn according to Google. Let's say that you wake up tomorrow, log on to the YouTube, and see your favorite YouTuber. That'd be me, right? Wink, wink. Click thumbs up. Who has posted a video about how Anchor has achieved the market value of a mail delivery company. So we've jumped from toy company to mail delivery company. What then do you suppose that $1,000 investment looks like? Well, I'll tell you, it looks pretty amazing. The math is still pretty easy for a 70 billion market cap company. It actually is something you can spin in your head. Just take 70 and divide by 10. And then you have the price per coin at $7. So your 1,000 US dollar investment you made when Anchor was trading around a dime, yeah, it's now worth 70. That's right, 70,000 US dollars. And as with our price example, assuming a linear relationship, if you burn half the coins, you'd be looking at a potential 140,000 US dollars of ridiculousness from a $1,000 investment. We're going to do one more example just because I kind of find this fun. The next tier up from FedEx is Coca-Cola, with a market cap of, let's just be pessimistic and call it 200 billion. So let's run the numbers. If you have $1,000 in Anchor today and wake up tomorrow to a market cap at 200 billion, what do you have? Well, you have 230,000 in US dollars. You'll probably want to consider the tax implications of that one. Toss in a coin burn at 50% and suddenly that $1,000 investment, well, it's $460,000 or $43 per coin. Wait, 43 US dollars per coin? Yes, that's what I said. Anchor would be valued at $43. That's US dollars per coin if those conditions were met. And what's crazy, it could happen, and here's why. We're going to use Bitcoin. Bitcoin, who has a fixed supply of 21 million coins, presently has a market cap of close to 1 trillion. I didn't cover the 1 trillion example, but perhaps we should pause here and do that. If Anchor were to become the next trillion-dollar coin, what would the price be per coin? The math is actually pretty simple. You'd be looking at $100 per coin. And $1,000 worth of Anchor today would be worth 1 million flat. Burn half the coins and assuming that linear relationship, and you'd be looking at turning $1,000 into 2 million. That's getting ridiculous. Yet the compound growth rate of crypto is pretty high, as that markets have indicated it's just getting started. The world has not yet woke up to the promise of crypto, but it will be. And as it does, it'll be the coins that are situated deep in the value chain that are really going to shine. Anchor has some unique properties in the marketplace that make it attractive. And as an individual investor, you have to ask yourself, is Anchor inherent value to the economy or the global economy at least the same as a toy company? If so, then $1,000 today is $13,000 tomorrow. And it's in US dollars, of course. In that timeline, all I can say is, well, congratulations. You could even codify it into a type of trading strategy. If you don't want to lose your anchor, hold it tight. And maybe, just maybe, it'll be what stars are made of.